Imagine this. What if the true potential of XRP isn't just in quick payments, but in becoming the backbone for settling trillions in global value, derivatives, tokenized assets, institutional trades, and more? As adoption surges, could XRP's price reflect massive locked-up demand, turning it into one of the most valuable digital assets ever? Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. The landscape for XRP has evolved dramatically. Ripple's strategic moves reveal a clear shift toward building comprehensive settlement and liquidity infrastructure on emerging digital rails. While cross-border payments remain a core application, the broader vision extends far beyond that. Ripple's $1.25 billion acquisition of Hidden Road, now rebranded as Ripple Prime, positions it as the first crypto-native company to operate a global, multi-asset prime broker. This platform handles clearing, financing, and execution across foreign exchange, digital assets, derivatives, swaps, and fixed income, clearing trillions annually for hundreds of institutional clients. Building on this momentum, Ripple recently announced a minority investment in TJM Investments, a regulated broker-dealer and introducing broker. This partnership enhances trade execution, clearing, and collateral efficiency while paving the way for TJM's clients, including hedge funds, asset managers, and family offices, to access digital assets. These developments underscore a deliberate strategy, transforming Ripple into a powerhouse for institutional-grade liquidity management and real-time settlement. By integrating Ripple USD, RLSD as collateral and migrating operations to the XRP ledger, these initiatives optimize costs, streamline processes, and bridge traditional finance with blockchain efficiency. This evolution mirrors how major e-commerce platforms began with niche products before dominating broad markets. Cross-border payments served as the proof of concept for XRP's utility, demonstrating fast, low-cost transactions on a scalable ledger. Now, with proven technology and growing institutional trust, the focus expands to settling a wider array of value, from tokenized real-world assets to complex derivatives. Ripple aims to capture a dominant share of this activity, providing end-to-end infrastructure that institutions demand: custody, payout networks, treasury management, prime brokerage, and instant settlement. As digital rails mature and regulatory clarity strengthens, XRP emerges as the efficient bridge asset, enabling seamless liquidity across borders and asset classes. Turning to the current market dynamics, technical indicators signal that XRP is navigating a period of significant pressure, yet positioned for potential reversal. As of mid-December 2025, XRP trades around the $1.90 to $2 range, following a retracement from its 2025 peak near $3.66. Momentum oscillators, including the Relative Strength Index RSI on weekly and multi-day time frames, have dipped into deeply oversold territory, levels around 33 to 39, not seen since late 2024 or earlier capitulation phases. Historically, such extreme oversold readings on the RSI have marked exhaustion points for selling pressure. For instance, similar low RSI values in November 2024 preceded a massive rally exceeding 580%, propelling XRP from under 50 to over 340 in early 2025. Other comparable setups in prior cycles also led to sharp rebounds, as buyers stepped in amid fear-driven sell-offs. Current charts show XRP testing key support near 180 to 190, with proximity to long-term moving averages and Fibonacci retracement levels reinforcing potential stabilization. These oversold conditions arise amid broader market volatility, yet XRP's underlying fundamentals remain robust. Ongoing institutional inflows, evidenced by spot ETF applications and growing on-chain activity, contrast with short-term price weakness. Active addresses on the XRP ledger have surged, transaction volumes stay elevated, and partnerships continue to expand. When positive developments align with technical capitulation, history suggests reversals can be swift and substantial. Oversold markets rarely persist indefinitely. Buyers often emerge to capitalize on discounted pricing, especially when adoption metrics trend upward. This brings us to the core question of XRP's long-term valuation potential. Insights from one of the XRP ledger's chief architects, David Schwartz, provide compelling perspective. In remarks dating back to periods when XRP traded at fractions of a dollar, Schwartz emphasized that a successful, widely adopted XRP ecosystem would necessitate a substantially higher price. The reasoning centers on liquidity efficiency. As transaction volumes scale to institutional and global levels, a low unit price would require locking up enormous quantities of XRP to facilitate transfers of meaningful value. For example, handling large dollar flows, whether in payments, derivative settlement, or tokenized assets, demands sufficient liquidity without immobilizing excessive supply. A higher price allows the same value to move with far fewer tokens in circulation at any time, preserving overall system fluidity. This dynamic benefits all participants. Institutions gain efficient access, while reduced volatility from locked-up supply supports stable operations. Schwartz's view was clear. A thriving XRP network cannot sustain indefinitely at cheap valuations, as escalating demand from real-world use cases would create upward pressure on price. This principle aligns with basic supply-demand economics in any asset market. Increased utility through liquidity pools, prime brokerage lending, ETF exposure, speculation, and settlement ties up XRP, making it scarcer for new entrants. Premium pricing emerges naturally as participants compete for access. Consider parallels in traditional markets. High-demand equities from leading companies command elevated valuations due to widespread exposure needs. If XRP achieves its intended role as a neutral bridge for global value movement, similar constraints could drive significant appreciation. Mass adoption introduces variables no model can precisely forecast. Factors like ETF inflows, potentially billions in assets under management, sovereign integrations, central bank pilots, and explosive growth in tokenized markets could amplify demand exponentially. Success breeds higher valuation. The extent depends on execution across partnerships, regulatory tailwinds, and technological upgrades. Creators of the ledger have long signaled that true potential implies XRP becoming a premium asset, not remaining inexpensive amid trillion-dollar flows. In summary, current oversold signals suggest near-term relief could be imminent, historically leading to strong bounces. More profoundly, Ripple's infrastructure build-out and foundational design point to XRP's role in a transformed financial landscape. As utility scales, price discovery will reflect locked-in demand, potentially far exceeding today's levels. The journey hinges on continued adoption, but the framework is in place for substantial long-term value accrual. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.